So you have some cash and you're not sure what to do with it. Maybe you're in the process of saving for a down payment on a new home, or maybe you just have a larger purchase coming up in the short term that you don't want to risk having that cash in the stock market or invested somewhere else. So in return, you're trying to figure out what to do with this money. Well, in today's video, I want to share with you guys 4 different ways that you can store your hard-earned cash and also generate interest on that money of upwards of 5% or more. Let's get into it. Now, the first one is probably the most obvious on the list, and that is a high yield savings account. A high yield savings account is a savings account that pays a high annual percentage yield, also known as an APY. It's important to realize that the APY, or the interest you're earning on your money, that percentage that is shown is on an annual basis. So if you see an APY of 5%, you're not earning 5% every single month. You're earning 5% on your money throughout the entire year. Now, although this interest rate is on an annual base, most likely in most of the high yield savings accounts that you will come across, you will receive those interest payments monthly. Now, the national average yield for savings accounts is right at 0.59% APY as of May 20th, 2024, according to Bankrate's most recent survey of institutions. If you look at this table, you can see a lot of your more popular larger banks at the bottom are paying you basically nothing for you to store your money with them. Chase, US Bank, Wells Fargo, and Bank of America currently are all offering a whopping 0.01% APY. Now, to put things into better perspective, let's look at these numbers in an example. Let's take $10,000. If you have $10,000 sitting in a savings account with one of those 4 major banks I just listed with the 0.01% APY, that's gonna give you a whopping $1 over a 12-month basis of your $10,000 sitting in that account. Versus if you compare that to a high yield savings account that's currently offering 5%, and you store that $10,000 in that high yield savings account offering the 5% APY, that is gonna give you an earnings of $500 on that $10,000 sitting in that account over the 12-month lifespan. A difference of $499 from the 0.01% APY versus the 5% APY. That is a huge difference, and obviously as the amounts of cash go up from $10,000, the amount of money you're earning in interest goes up as well. So it's very, very important to make sure that you are shopping wisely for that high yield savings account that's gonna give you the best bang for your buck, but also is going to be a relatively safe place to store your cash as well. Now, speaking of banks that offer a higher interest rate, here is a list of some of those top high yield savings accounts according to NerdWallet, with the highest one being Everbank with a 5.15% rate, and 2 of my personal favorites being Capital One and SoFi coming in at 4.25% and 4.6%. Now, one of the best cases for a high yield savings account is something that I talk about here all the time on the channel, and that is an emergency fund. The one reason I think high yield savings accounts are a perfect vehicle for something like an emergency fund is because high yield savings accounts are very liquid, meaning you can get access to that cash without penalty relatively quick. Now, I don't want to dive into all about an emergency funds, but I do want to take this time again, because I like to mention it as much as I can, how important emergency funds are. Guys, most people in America cannot afford a $1,000 expense. Think about that for a second. And when you do think about that, if that doesn't scare you, that is a problem, guys. To all of you out there, if you are watching this video right now and you're telling yourself, hey, that's me, I can't afford a $1,000 expense right now, I'm gonna challenge you to create an emergency fund and start funding that puppy right now, because everyone has a rainy day and you wanna be prepared to have that cash set aside already. Think of it as an insurance policy for yourself to be able to afford upfront costs or expenses that may pop out of nowhere, because it happens to all of us. So you might as well be prepared whenever you know it's gonna happen. But as I mentioned, one of the best accounts to keep that cash stored while earning a little bit of money on it as well is a high yield savings account. And another big benefit with the high yield savings account is it is FDI insured up to $250,000 if something would ever happen to that bank or your hard-earned money. Now, moving right along to the second one on the list for today's video, it is known as Treasury bills or T-bills. A Treasury bill is a short-term US government debt obligation backed by the Treasury Department. Terms range from 4 to 52 weeks. Treasury bills are usually sold in denominations of $1,000, while some can reach a maximum denomination of $5 million. Now, one very popular question that always comes up whenever there's discussion about Treasury bills is, how do you buy them? Now, one way you can buy T-bills is with an app known as Finvest. Finvest is an easy way to buy US Treasury bills in a few clicks through your phone. With already millions of deposits through the platform, Finvest makes it super simple to start buying T-bills today. One of the big benefits of buying T-bills is you don't pay any state taxes on interest earned, unlike your savings account, which makes a huge difference when it comes to returns. If you are looking for a place to purchase Treasury bills, make sure you click that link down below in my description to sign up and try out Finvest today. I'll also have a pinned comment as well. Now, one thing to note with T-bills is that it does come with a fixed rate. Unlike a high yield savings account that we were just talking about, the high yield savings account is at a varied rate. It's totally dependent on what's going on in that interest rate environment, to where with T-bills, it is a completely fixed rate. And with having that fixed rate, this ensures you know exactly the amount of money you will be making on the duration of the T-bills. And with those T-bills having that fixed rate, what this does is this ensures you know exactly how much money you will make throughout the duration that you own those T-bills. Now, Treasury bills have what is known as maturities, and this is basically the lifespan of the investment. The maturity time frame for Treasury bills cited by the US Treasury is 4, 8, 13, 17, 26, and 52 weeks. And one thing to keep in mind with that is when interest rates are expected to rise, longer maturity dates pay more than those shorter dates. But unfortunately, in the time frame we're living in right now, and listening to all the different economists that come on CNBC, no one knows what the hell is going to happen in the future. Now, the third one on today's list is known as a money market fund. A money market fund is a kind of mutual fund that invests in highly liquid, near-term instruments. These instruments include cash equivalent securities, and high credit rating, debt-based securities with a short-term maturity such as US Treasuries. They are intended to offer investors high liquidity with a very low level of risk. Now, two of the probably most popular money market funds are SPACs from Fidelity, or SPAXX, and VMFXX from Vanguard. Now, looking at a quick difference between the two here, SPACs is currently yielding an annual 4.95%, while VMFXX yields an annual 5.27%. Now, the interest rates that come with money market funds are just like high yield savings accounts. They are subject to change based on the interest rate environment. Now, SPACs also currently has the higher expense ratio of the two, coming in at 0.42% versus Vanguard's 0.11%. Now, one thing to realize with money market funds is that they are not as safe as cash. And also, since they are considered an investment, they are not FDIC insured. Now, generally speaking, money market funds are relatively a pretty safe investment. Now, although there has been times in history where that NAV price has dropped below $1, which in return would lower the amount of cash that you have sitting in that money market fund if that NAV price does go down below $1. Now, although this is a very rare occurrence that the value of the money market fund would go below $1, it can happen. The past two times in history that come to my mind that we've seen this happen on money market funds is 1994 as well as 2008. So please understand, whenever you have your money in a money market fund, although the risk is very low, there still is a risk that something can happen to the values of those funds. But again, I will say with those times that the value did go down in those money market funds, they did eventually come back up to that dollar value. Now, last but not least on today's list is known as CDs. A CD, or a certificate of deposit, is a type of savings account that pays a fixed interest rate on money held for an agreed upon period of time. Offered by both banks and credit unions, CDs differ from standard savings accounts, and the CD funds must remain untouched for the entirety of the term. Now, if you happen to withdraw your money before that term is met from the CD, then you will have to pay a penalty. For examples on what some of these penalties could look like, here's a chart of 5 different banks that all offer CDs. As you can see, on some of these CDs, the withdrawal penalty can be up to as much as 6 months to even 1 year of interest earned from that CD. Now, there are available options, what's known as no penalty CDs or liquid CDs, but these generally come with a lower interest rate as well as a shorter duration. What you're doing basically is you're trading flexibility for earnings. So there you have it, guys. Those are 4 different ways that you can park some cash and also earn some interest on your hard-earned money while it's sitting in there. Also, don't forget, again, if you are interested in finding a place to purchase treasury bills, check out Finvest using the link down below in my description to try them out for free today. Thank you guys so much for watching. Really do appreciate it. And until the next video, you all take care.